All right, here we go. Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief. From what I understand, let's just make sure YouTube is YouTubing. And
things are
Daily
popping.
Brief. That's good. Hello, everybody. Hey, Bob. Bob says hello to you, Duke. Welcome everybody to the Frivolity. We've got about an hour or so to work with here this morning. I do have class. Wednesdays is class day. So we'll try and wrap it up pretty close to the top of the hour. The worst part about this kind of market state is there hasn't been a heck of a lot of changes. And we're going through the process of now, in my opinion, I guess the way that I interpret it is the United States of America, which is technically sort of like the world's economic engine, incredibly sentiment based, and the stock market and the whole society for that matter is incredibly highly leveraged. And all somebody has to do is sneeze, no pun intended, and the house of cards can come tumbling down really easily. What I do see here, though, is and this is a hard concept for a lot of people to get, but I in 30 years playing this game and then being a student of the market. Ironically enough, capital markets themselves, they would prefer that government doesn't participate. Capitalism and all that kind of stuff, free market, right? No central planning. But you get into environments where the capitalists get over their heads. They've way too leveraged themselves. Asset prices have to come back down. I personally think that the whole damn thing was engineered. You heard me go on and on and on about that leap expiry and all that money that changed hands. So for whatever it's worth, 1%, I don't think they're feeling any pain through this at all. But the markets go into sort of free fall, and then the public starts freaking out. But what I've noticed decade in, decade out, is that when governments step in and say, all right, enough is enough, we will backstop this, we will fund bailout programs and stuff with taxpayer money. And it's not really taxpayer money, because keep in mind, U.S. government runs a $1 trillion deficit in a good year. What do you think those deficits are going to look like in bad years? And actually, it's interesting. Somebody was sharing Mike Novogratz interview yesterday in the lounge. Pretty disappointed, to be honest with you, that the video interview quality was pretty poor. The guy interviewing him, I don't know, they had some funny connection, so it was a little bit difficult to slog through. But nonetheless, I think it was pretty good information. And what I found really weird, whenever I listen to Novogratz, it's like I'm listening to myself. I don't know whether the guy listens to my broadcasts or not, but it's shocking. Every goddamn thing I've been saying over the past week or two is literally coming out of his mouth word for word. It's freaky. Yeah, maybe it's I know. Like it's a bit spooky how similar the messages are. So, I listened to him yesterday, and everything that I've said to you guys, monetary policy is not the solution to this. Fiscal policy is the solution. We heard that exactly out of him. And interestingly enough, he actually admitted that he's probably along a bit too much Bitcoin from up top. But if anything, I kind of liked the fact that he was an open book and he was talking blatantly about how he was feeling in the market. I like that, because that's a guy you can believe. One thing, you want to see a piss off, and I'm trying to find the damn tweet here, or the post that I put in launch. If anybody can find that Novogratz interview, save me some time here looking. I'd appreciate it. But you want to see a kick in the pants. This is the market for you. And, if you guys want to do this over long terms, you got to understand this is a trader's life. I mean, fuck, man, I got stopped out on this goddamn trade twice, and then look at what it's done here today. I mean, this is embarrassing. But it's a trader's life. This shit happens. And if anything, the guys that I respect in the marketplace are the guys that go, oh, fuck, man, I'm long from up top, and I'm feeling some heat, or I got stopped out, and, it's the way it goes, and it's trader's life. You guys all know I'm pretty much an open book with you guys. And I had to take a lot of punishment there through that meltdown. And ironically enough, this kind of shit happens. We were actually looking at this as a TRI-SOF trade, but unfortunately their debt to equity ratio is pretty high. It's like 0.7, 0.8. So as a result, we took a pass on it. But holy for holies. Drive you crazy. Zig when you should have zagged. All that kind of talk. It's encouraging to see some green on the screen. If anything, I love, Sjord's feeling pretty good for himself. If you were long a bit of that stock here through this, you wouldn't be complaining too much, eh? So, ironically enough, there are some bright spots out there in the market. I did hear, like, Crypto Kids. Little steam, from what I understand. They locked up Justin Sun's coins, said, fuck you, you're not getting them. You can't control us. Ironically enough, I actually look at this chart and, if anything, we're building this webinar kind of thing, and one message that I don't think I clearly conveyed through that webinar script that I think we need to edit it is the imperative nature of making sure to pay yourself when you are on the right side of the market. Average winners bigger than your average losers, all that kind of talk. Ironically enough, when I look at something like Steam, I still think there's a hell of a long way to go here. You can see where the top of value is, 50% rolls, previous horizontal support and resistance. So, if you did buy off the bottom, congratulations, way to go, you're a rock star. And you're banging out doubles, which it looks like we've got into that neighborhood now, so way to go. But believe it or not, actually, I think you probably actually could get another double out of this. So don't be in a big hurry to walk away from names that look like this. That's a good-looking chart. So, and if anything, this is probably a really good conversation about, I wouldn't necessarily, paint all crypto with the same brush in this type of market state. Go and find your stories. Like I said, obviously we have a fundamental driver, Justin Sun, them telling, fuck you, Mr. Sun. And also, too, I think somebody said that there's like a hard fork or something like coming up here soon on this. So, just try and go and find your fundamental reasons. Try and find your W's. And, of course, weekly W's, even better. And really, if you see a chart that looks like this, just flatlining against the bottom end of the range. You remember I told you about that Verge trade that I had years ago, where it just sort of sat at like 2 or 3 sats forever and then started to launch. I'll tell you, that's exactly that same sort of scenario. And really, this is everything that we teach in the course in the school. You can see the bull div there in MACD. Of course, you can see things like Willie ridiculously oversold, and then W's start to form in RSIs, downtrend lines broken. I mean, everything that we teach at TRI is in this chart. Congratulations to anybody who's able to take advantage of that. Way to go. Where do we go next? Risk on, risk off, sort of like what's the bigger picture going on right now. It's interesting to see how gold still can't really buy a friend here, but I do see bonds, yen now sort of also pointing lower. So maybe the freaked outness of the market is starting to calm down a little bit. You can see stocks are still working their way lower. Interesting to see how Bitcoin seems to have found a bit of a range here for the time being. And oil just can't buy a friend in here. And frankly speaking, it's kind of funny. the other day I just threw on this when we were building out this trading plan and this trading model. This was a gentleman on the site, goes by the name Sin. I sure hope all our Aussies are doing well. I got a report that Johnny Salmon's a bit stressed out right at the moment, so hang in there, John. This, I guess about 2 or 3 school terms ago, Sin happened to be in the algo writing part of the level 2 program, and he was really jazzed on my 3 thumbs method, and that's basically what this script is. So in essence, the 3 thumbs method says when this thing goes either uber bull or uber bear and you get new market structure coming in, i.e. break of key support, that in essence this is the trade metric and you should shoot for 2 to 1, which kind of shocked me when I threw this on here. I go, holy shit, that's painting like $10, $11 a barrel for crude oil. And I was like, there's no way that's going to happen. But nonetheless, you got to see what's going to happen. You can see the crude oil market here is just in free fall right now. Extremely dangerous. I think I told the community that probably about a month or so ago, especially when we lost these lows in here, I have no interest in being long crude. And actually, I think that was off of like the higher time frame. This is a 4-hour chart, eh? That was off of the loss of these lows, and I liquidated almost all of my energy. I don't have any more energy on the books, and sure enough, the whole damn thing's just collapsing here. So I'm not really even the slightest bit interested in oil. And the sad part about it is, like I said, in Canada, we're so screwed here. I tell you, I'd be really surprised at the end of all this if Canada, the country, is even still in existence. Because my feeling is we could be forced into bankruptcy here. Canadian dollar, of course. What do you think? Is that a buy? Holy fuck! Jesus H Christ! Commodity currencies just look absolute disastrous here. 6A probably. I haven't looked at the Aussie dollar in a bit, yeah, Aussie dollar, same story, and it's kind of tragic, right? Remember at the top of the commodities market, I was going, oh boy, I got to be bearish of these guys for like the next 15, 20 years. Did anybody believe me? You are now seeing this play out in glorious Technicolor. It's just brutal. And I don't think you guys have ever seen these kind of markets before. When these resets happen, they are violent. And actually, it's interesting. I had made reference to this in the lounge last night that, I don't know whether any of you guys actually even believed this whole sort of fear, greed cycle. And through fear cycles, people like commodities and hard assets. And then when we transition into the growth and the greed cycle, you can't give away commodities. Well, you guys are going through the transition now. Wonderful, eh? And sometimes these resets, especially when we talk about 10-year economic cycles, the unwinding of the bull, this is what it looks like. And interestingly enough, through sort of like the 2008 financial crisis, this is when Canada was actually in the sweet spot of market state. You could argue that, through 2008 financial asset crisis, same thing with the Australian dollar. People were joking about how Australia hasn't had a recession in 50 million years. Well, guess what, everybody? You're going to get that recession good and hard. But what you have to understand when you look at this chart is this was the fear cycle. So this is when the commodity currencies could do the best as they could. And what I mused about forever was that through the commodity cycle, if this country had half a brain, they would have spent the time through this entire, see how the commodity cycle started in 2000, 2001, through that recession. 2008 didn't really hit the commodity countries too hard. They were right back up top. But this was during the friendly part of the market. And what should have happened was Canada should have been paying down its debt and reducing deficits and running budget surpluses. But these stupid fucking politicians, through this whole goddamn friendly cycle, kept running more deficits and more printing paper and diluting their country's currency. That was through a friendly cycle. What happens through an unfriendly cycle? Well, this. And I hate to say it, everybody. I mean, can you see the AB equals CD here? I can see it. It's as blatant as boobity-boo. I mean, the good part about it is most of you are not Canadian, so you're just laughing at us. Boobity schmoo. Jesus Christ. 45 cents. I'll tell you, I'm very, very disappointed in the baby boomers. They've just completely fucked this country's future. So sad. Anyway, happy, joy. So back to our sort of, I got off on a tangent talking about oil there. I tell you, commodity countries, and now you got the oil and the gold moving down together. Oh boy. My advice would be to simply, first and foremost, the simple message should be cool your jets. I mean, that is just absolutely the most blatant message. Just cool your jets. Don't take any risks you have to. And ironically enough, this is, like 2 or 3 months ago, people were complaining that they weren't getting any return on their short-term investment returns, and so as a result, I'm not getting any interest on my short-term money, but I'm sitting in cash. Stock market just keeps booming higher, and I'm feeling like I'm being left behind. Well, I got to tell you, it's in this kind of environment. Who cares if the bankers are paying you a really crappy low rate on your money? At least you have some money. The brutal reality of this is a lot of people that are working and living paycheck to paycheck, they could be in really big trouble here. So your money is extremely dear. It should be to your heart. Okay, so, long and short of it here is the market is extremely stressed right now. The interesting thing about this is, though, does it make sense that when the public starts going, oh my goodness, my retirement, oh, everything's going to hell in a handbasket, 401k, what's the public likely to do? Are they likely to step in on the buy side or the sell side? It's pretty obvious. And of course, we all know public buys up markets and they sell down markets. Exact opposite of what institutional players do. So the question I would have here is, would it really make sense for us as market participants to get too sucked into the bear story here and start selling down here? I think you kind of missed the bus. I mean, that's just the blatant message. And what I'm starting to see, it hasn't come in yet, but I'm starting to see the little anecdotal evidence that the public is getting a little ridiculous here. First and foremost, VIX index sitting at 75.30. We all know that the VIX doesn't like to stay up there, and we all know that the VIX, it can go through, say, several weeks, maybe a month or two of insane volatility, but 9 times out of 10, if you look at this, if we look at all of the data going back forever, the VIX is generally pointing down, i.e. market's happy. But we get into these market states where things are out of control. The question ultimately here, though, is does it make sense to panic now, here? Maybe you should have been buying your puts and selling all your stock down here. So, again, that's sort of like looking backwards. An assignment for the level 1ers. Anybody who's done the level 1 course and is watching this video, you should go back and review what your insurance policy premiums are going to cost you now to insure your portfolio, and you'll see that, wow, those insurance premiums have gone through the roof. But, that's kind of like, you're going to buy your flood insurance after the flood. You're going to buy your tornado insurance after the tornadoes come and destroyed your house. And the sad part about it is that's actually when the insurance policies are most expensive. Although statistically, seeing back-to-back events like that is actually extremely rare. So I do think that we need to recognize market state here. A couple things also too that kind of jumped out at me. Notice this is, we've been watching, this is the put-call ratio, or it's in essence the number of puts bought versus the number of calls bought. And generally speaking, people buy call options. It's generally, I believe it's a bull market, that kind of talk. And they only start panic buying put options when they see everything going to ratchet. So, this is a classic contrarian indicator. Obviously, when it was Wing out there back in February, we should have been paying attention. I think Johnny Salmon in his report was sort of screaming that, hey, this thing is not happy. But notice here, something is changing. This actually looks very Emmy now. So we've got the public panicking. We've got them paying up premiums for puts. But at the same time, that's an old story now. And it actually looks like this is calming down a little bit. So anecdotally, that's not a bad sign. It's interesting to see, I have on this upper screen here, I have the S&P 500, and then what I have here in the gray is the moving average of the advanced decline line. And interestingly enough, actually stocks are starting to firm up here a little bit on a sort of moving average basis. There's another little piece of anecdotal positivity. So, it's not quote-unquote buy signals yet, but we need to respect the fact that, number one, market's panicking. Usually market panics when we're at a bottom. Number two, the internals inside the market are actually starting to shift here. And then number three, we just look at the price chart itself. And you can see the grind going on here. I think it was right in here, right? We had the futures locked limit lower, and yet ironically enough, all we're doing was we're just playing with these lows in here. I wouldn't be surprised if there's one more dip here just to really freak people out, and that actually marks some sort of ultimate low. It's tough to say and come up with levels here. You can see everything, all the previous levels have been blown away. I don't think we can actually start getting bullish until we actually start seeing W's on the other side of this trend line. But, I think I'd sort of started the conversation off with sort of a general message that the capital markets will float on their own. And what I noticed, which was really interesting, was, all of the asset prices got bid up to ridiculous levels in 2006. We used to walk around the office. I've told you guys repeatedly, it wasn't really a question of talking to new clients and interviews and stuff about if they owned their home. It was how many homes do you own? And it took a while for that to break. It broke. But the interesting thing about that through 2007 and then the election year in 2008 was George Bush himself kind of disappeared. I don't know whether you guys remember that environment. And, all of his cronies, everybody just sort of just faded off into the background. Cheney had no interest whatsoever in becoming president, and basically the end of that 8 years to tenure was done. So, Obama was elected, and it was on his election that things like quantitative easing programs start, where the government saying we are putting a floor in this market, whether you like it or not. TARP was passed and probably could not have been passed. It was a toxic asset repurchase program or something like that. Basically buying all the bad bonds off of the bank's books. Under a Democrat president. So I did find it interesting that just in the past couple of days, and you've been hearing me moaning and groaning on social media, asking if we are going to get some leadership from somewhere. I was pleased to see yesterday the news conferences were handled in a very earnest manner. Mr. Trump behaved himself pretty much about 90% of the press conference, and then right at the very end, and I don't know why he did it, but he threw in a total curveball that really he didn't have to do, but he decided that for one reason or another, he wants to keep the political pressure on and keep politicizing this sickness, and he sort of said now he's calling it the China virus, which I don't think helped anything at all. And then on top of that, I can't remember how the cadence goes, but recently the U.S. decided that the Chinese media had a lot of people that were in the United States under media badges, but in essence just being propagandists and cause what they would term causing trouble here within the United States. So recently the U.S. Federal government cut the amount of visas that were available to the Chinese. And yesterday, the Chinese government actually came back and banned all Wall Street Journal, New York Times, and Washington Post reporters from being able to operate in China. So I don't know why we have to do this. This is completely inappropriate. But for some reason, the United States of America has decided it still wants to continue this pressure and this campaign against China, which, frankly speaking, I don't think is very adult. I don't think it's very good leadership. We're in a period of crisis right now, and what we need is just solid, strong leadership. Let's just get through this. And yes, once we're over this crisis, we will readdress the trade issues. Ratcheting the tension up now, I think, is probably that final shoe that's going to actually cause the market to dump a bit more here. We'll see what happens. Only time will tell, but that's sort of my take on all that. I wanted to express that to you guys. So no buy signals here. I don't know whether we're actually near a bottom. I suppose if we go through sort of our three-step process, we can probably figure out where's the best place to do this. We just do say the S&P 500. I don't know whether we actually have any trade locations coming in here yet. I mean, no doubt about it. You can see the momentum has broken in this market. Maybe I'll just get rid of all this stuff here. Boom. There we go. So we are coming up against a key support low. I don't know. This would be a really good question. Have we actually accepted back down into value? If we have, and of course we can always move this around. Probably best to actually look at the 2008 lows now. If we look at this whole profile here, gee whiz, value is not all the way down to 180. You know, it is interesting. Does anybody remember what's the benchmark measurement that we use to give us a gauge where markets should go to if we go into recession? How much do stock markets usually lose in recessions? So that's roughly 50% of the entire range. And the interesting thing enough, especially all our GAN fans, is this is how Gann would actually measure his 50% rules. He would just take the high and divide it and use 0. So interestingly enough, that's at about 169. I don't think we hit this now. No, well that's what I just said there, Craig. So by all means, I don't know, Craig, have you done the education program? Spent a lot of time going through WD Gann. And it's interesting how a lot of his charts he just simply draws the 50, especially if you're in one of these sort of like crash scenarios and recessions and all that kind of stuff. And then, okay, cool. And then, really, all this is, I can't get it at zero. Anyway, interesting how 50% of this move actually takes us right back into this notch that sure looks like it needs to be filled in right at the top of value there, right? Yeah, and he draws his fans from zero as well, yeah. Like a lot of his Gann angles, he will actually just draw a 45-degree angle right off of these lows. I don't know whether he goes up or he goes down. I mean, it's if anything, Colin, if you'd like, I think Colin Craig, if you'd like to learn more of it, I give out the. I suppose we can go both ways here, right? What does he call it? The method to my madness, or the method to my methodology, or whatever. And it's about a 30-40 page read. It's very, very thick. So Craig, if you would like to explore Gann on your own, or if you want to wait for the school program, whatever, it's up to you. But if you do want to explore that on your own, just PM me and I'll give you that document. I think we have it in the library, but the problem is we're not really supposed to be posting this kind of stuff. And I know Stuart does not like this, but I think this is relatively free and easily accessible on the internet. So you want to, Craig, there you go. I went through the whole process. Anybody who wants to brush up on W.D. Gann, there's his thesis. Anyway, I won't go into Gann too much here. I just wanted to make a tertiary reference to the idea that 50% of this entire range is very typical for a recession. So probably we're going to bottom probably somewhere around 170 here, which I think makes sense because remember, Mr. Trump, he was elected right. Where is it? Oh, way up there? No. Way here. So Mr. Trump was elected right in November. Yeah, right there. That's where all those funny price gaps are, especially on the futures charts. So the irony of it all is, we look left, horizontal support and resistance. This is all sort of under old Obama 10-year. Those are definitely some key support levels. And, of course, there's Mr. Trump's election. And if you look in the S&P 500, there's, like, gaps in there on the futures. So if we zoom back out, I think we're starting to see some levels here. So interesting notch on the profile. I think that makes perfect sense. 50% of basically price itself. Be interesting to see where 50% of just this range is. Not a hell of a lot of difference, eh? So a difference of about 30 points. And interesting how, look how that 50% roll and this 50 of the entire range is basically just going down and testing all these key lows. So I hate to say it, guys, but through 2020, maybe even into 2021, we're probably going to have to trade back into here. And if anything, you know what? As capitalists, actually, we kind of want them just to rip the bandage off, get it done, and then we can start forming a base and starting to climb back up. If this becomes long and protracted, this might take years to play out. I don't know whether it's such a good idea to get too sucked into the sell side, considering we came up against that level. Can you guys see almost like a head and shoulders forming here? So I wouldn't be surprised if it looks something like boobity boo. I don't know. Do we go all the way up there? I don't know. Boom, boom, boom. Like that. And, the irony of it all is we even have reference dates. So we know that the beginning of April is supposed to be a reference. Oh, excuse me. Why does it always get the hiccups about halfway through these shows? We are also looking for a rally into July, like so. So maybe our future looks something like that. I don't know. Interesting how 45 degree. I don't know whether this is squared up or not, though, so don't quote me on that. But I wouldn't be surprised if our counter trend rally. Notice the fast moving averages are still sitting way up top here. I wouldn't be surprised if there's some sort of counter trend rally up top. But, like investors, oh boy, that's a nasty sell signal. Everybody can see the bear divs. I mean, this is a monstrous failure here. Even got a bear div on RSI there. I know one person on the site's super jazzed about RSI divs right now. So, really good example of an RSI div. And also, too, an even massive, look at that huge divergence. Right? The sad part about it for equity investors, this bull's over, and it's got a lot of cleaning up to do. So we won't really even think about getting bullish again until this trend is broken. And then even when that trend's broken, maybe near the end of 2020, remember our pivot there's in November, on any kind of counter trend rally, we're just going to be running up against future resistance. So put a fork in her, baby. That bull market is over. Having said that, I do like the idea of some sort of relief rally here. As I said before, governments are coming in earnest. I had to go get new vape shit for my vape pen here this morning because I ran out. So I popped in the car, headed down to the corner store here, and I in the car I happen to have on my son's little bebop radio station that he likes to listen to, and on that beboppy radio station they had a formal address from the Prime Minister of Canada. Oh boy! So the higher ups are freaking out. Obviously, this virus has got, especially the North American politicians' attention. From what I understand, it's basically martial law in Europe now. I got to tell you, you can't write better fiction than reality. Did any of you expect this to happen? I know Julian's probably going, I did. Really, Jamie? You thought all hell was going to break loose here this year? I certainly did not see this coming. It took me by surprise. I was still thinking, we were going to rally into that election, but I don't see that now. With regard to, you went and bought toilet paper, did you? All right. Actually, Jamie, we used to have you on giving us little updates on macro analysis. We haven't seen you in a while. I don't know. Do you still feel like doing one of those kind of reports?
Yeah, definitely, man.
Hey, there he is. He's got a microphone.
Yeah, I can if you've got a slot free Monday, I'll come on. I've just been trying to follow everything that's been going on, so
it's up to you. I mean, if you feel like enlightening some of our community, we'd love to hear from you.
Yeah, definitely. I'll see you Monday.
Okay, cool. Kevin, let's pencil in Jamie. And actually, do we dare look at our bet? Let's see how our bet's doing. I think David David absolutely killed me on our bet, but I think I'm still winning on your and our bet. Let's see.
Yeah,
how's Brian doing
definitely
here?
The victor.
Oh, I'm still winning.
Yeah, I'll throw in the towel. I don't mind.
Who knows? Americans might. Hey, look at this. Hey, what's going on over here? I'm beating David. Fucking A. Look at that! I'm ahead of David now. So this is why you don't want to throw in the towel here, Jamie. Look at this. I'm coming roaring back here against David. So, and from what I heard, and I was a bit surprised, and maybe you can give us an update when you come on Monday, but I was a bit surprised. People were kind of saying Boris has kind of disappeared lately. I don't know whether he's...
It's business as usual in the UK. It's just, just keep drinking your tea, make sure you wash your hands, and that's about it.
Okay.
It's slowly, their plan was to try and, people, I think it was a bit misconstrued, but people were talking about trying to get 60% of the population to get the virus and then become a herd immunity so everybody gets it. But I think they're doing a U-turn finally now. They're going to close. We still haven't closed schools yet, so apparently they're going to close schools on Friday. But
you know, like I saw this tweet recently, and I thought this was just so perfectly British. And I thought of you instantly when I saw this. I don't know whether you saw this or not, but it was so funny. Where the hell is it? Maybe I've lost it. These guys. I love this. I think I could play this without getting into
such
trouble.
a great show.
This is absolutely. This is so perfect.
Going to happen.
Stage 2, we say
There's so
something may be
many
going to
other
happen,
scenes
but we
like
should
that
do
as well.
nothing
It's a
about it.
really good
Stage
show.
3, we say that maybe we should do something about it, but there's nothing we can do.
Stage 4, we say maybe there was something we could have done, but it's too late now.
It's so perfectly British. So perfectly British. So I mean, if you want to chuckle, save it to your files. I thought that really put a smile on my face. I thought it was so funny. But anyway, all right. So we will get the big econ report from Jamie on Monday. Totally awesome. Thank you, sir. No, awfully nice to see you. I don't know whether, and actually maybe I'll talk to you about this on Monday, but did you kind of give me like a backhanded compliment the other day there? I got the impression.
You know what? I posted it and then I thought, is he going to read that like differently to how I put it? And then I thought, oh yeah, probably. But I when I saw it, I was like, yeah, it's just always from the original level 1 days when it was. I'm best. I'm a cheap ass man. I ain't buying that.
That's what it was. Yeah, I mean, I'm a cheap ass. That's just the way I am. Sorry. But I just assumed that the comment was delivered with the most love possible. I don't know.
Always. Only love packages over here, Brian.
Okay. All right. So I'll just take it in stride. I mean, I think I told you. You know, what pisses me off about the stock market right now, but if anything, it's such a great testament to why I like to do TRISOFs, where you just simply buy the stock option. You don't really are too concerned with short-term price action. Sometimes, of course, it can blow up in your face, like the Kirksack. I mean, our call options here are basically toast. But, you know, it's kind of interesting where I was trying to take a couple long stabs on this apron, and I got stopped out, son of a bitch. Oh, yeah, this was it. It's off the daily. And then it turns out the goddamn thing rallies. So this is actually a testament to why I like TRISOFs. Because if you can just come in and see the numbers and you see where the 50% rule is, you know, you don't get wrapped up in the W's and getting stopped out. You just buy your option and see what happens. And holy crap, that one trade on options would have easily paid for, you know, a whole year's worth of work. Just drives you crazy. But under the heading of bad luck, and, you know, like I journal, logged, I'm an open book, I got my ass kicked here twice, and yet it turns out that I was actually on the right side of the trade. This is a trader's life. I mean, it's just the way it goes in this business. Yeah, if you can't handle this kind of action, then maybe being a day trader isn't, you know, or being a swing trader isn't for you. As well, too, though, I kind of made reference to this yesterday. Sjord and I really like Sjord's approach, and so for fun, we're going to just force myself to get involved in the New York opening range trade, and Sjord had a signal. Interesting how this thing worked up to move stop to scratch, and then right on the European close, they brought it right back to scratch. So the first day trade of this model we took was just a big scratch. No big deal. Next bus in 10 minutes. I'm just glad that I've got this thing going. Sjord and I are hooking up. We have a room, I think we call it battle stations, that if you want to get into the habit of practicing taking opening range trades on the New York Stock Exchange. And this plan, basically we're trying to play the bump out of the New York Open into the European close. So here's the room. We call it battle stations. And you can see we're in here reporting away. I've created a new spreadsheet, kind of like that I want to be a day trader model that I did for you last fall, and we logged our first trade today. So I'll be continually reporting this, and what I really want to do is just get into the habit with you guys, just reporting a typical day trader's life, because I do like the idea that while the broader economy is going to shit, you still want to stay busy. So how do you stay busy if you're not going to be hunting a whole bunch of daily and weekly W's because they just aren't there? Well, one solution is to get to work on building day trader models. And, New York kill zone's great liquidity window, so that's one reason. Another reason is we have momentum confirmation, W's through 50 lines on RSIs, that kind of thing. W's in price, and your move through the 50-period moving average, just off a short period chart. So we're going to run this for a while, see how it goes, log our results, better than 2 to 1s. We want to try and make sure maybe this profit objective was a little bit aggressive at 2.16. I was just simply going for a gap fill here. It is what it is, and really long and short of it here, as we're vetting the trade setup out, I don't have any money at risk here. We're totally paper trading. And we're going through the process of vetting the setup out. So be sure to watch for that as we go forward here. Do we have any ideas coming out of TRI-SOF last night? Nothing really startling. A couple names that we've been sort of thinking about recently, which I don't think should really surprise anybody. I think it's SWN. This is a natural gas play. It was kind of funny. You can see in the meeting last night we talked about this. Are we supposed to do anything if we ever see upside key reversals? Just buy the fucking thing. So as you can see, this thing has chugged its way higher here. But what we found interesting about this, and I love David. He actually won one of our first contests for a school seat way back when. He absolutely loves his head and shoulders patterns. And so we're going to keep an eye on this bad boy. Natural gas I tried to explain this in the TRI-SOF meeting last night. I don't know whether I did a half decent job. I think, Andrew, aren't you here? Yeah, you are. Did I do a half decent job answering that question for you last night, Andrew? Do you have a microphone? I don't know, you can just type. Yeah? Okay, well, that's cool. Historically, natural gas usually does pretty well during recessions simply because, we have to have electricity. Interestingly enough, just even like through Great Depression, stuff like that, the telephone system still worked. The street lights still worked. Traffic lights, they still have to work. And over the past 20, 30 years, carbon footprint, all that kind of stuff, a lot of our society has moved away from using coal-fired electrical generation plants to natural gas-fired electrical generation plants. So natural gas has become one of these sort of base commodities that will have an inherent demand. The demand often comes from like governments and institutions that even if there is a Great Depression, it doesn't matter. They're still going to operate. So as a result, think utilities, think boring, think absolutely not going to go out of business when, the Netflixes, the Amazons, the Microsofts, the Boeings are trading at 20 times book, just ridiculous numbers. When all that growth prospect is the economy going to stop growing, maybe even a recession, the economy actually shrinks, all those high beta stocks, they lose all those premiums because they're trading at just ridiculous levels relative to the actual value of the stock. Whereas natural gas, on the other hand, it actually, a lot of these stocks actually trade below book value because they're really boring investments. And they're not anticipated to have high yields. Now, the irony of it all is that when people rotate out of the high beta stocks, the high growth stocks, they rotate into these quote-unquote value names, ironically enough, their prices can get bid up. And so what you often see is in recessions, natural gas and really defensive names, pharmaceutical names, which technically are immune to the economic cycle, utilities, very basic, boring stuff, they actually do fairly well. So coming out of the TRI-SOF meeting, David was like, I'm going to be hunting a Head and Shoulders here on this natural gas. I do like this thinking because, it makes sense into that late March, early April pivot. Oh, and by the way, I think somebody shared it with me. I just don't know where the hell I have the link. But for all those Celestial people, and I shared the link with Shane, Andrew. So if you see Shane later on, Andrew, can you tell him to watch this? This is a really interesting interview. This is for all the Celestial people. So if you don't buy these planetary cycles and, Saturn and Jupiter and Pluto and Capricorn, all hell gonna break loose, blah, 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 then don't bother watching this guy, because most of this stuff is, it's all astrological, astrology, that kind of stuff. But the point of the matter is it's fascinating to see the correlation. And according to this guy, he's saying that the end of March, beginning of April, something specific is supposed to happen, Mercury retrograde, whatever it is, that's actually a really, really dangerous time. So I've been sort of talking to you guys recently about how I think that the market's going to pivot near the end of the month. I actually think that first, and remember all these, governments and stuff have closed up shop and everything's closing that first. I think actually we have to get through, say, sort of 7th, 8th, 9th before we actually see that, okay, everything's done and it's played out. He actually said that right through this first, end of March, beginning of April, that's actually a really, really, it's like a double, triple whammy kind of thing. So just be cognizant, be careful here. What I'm sort of thinking is interesting how this natural gas stock, think opposite, right? Market freaking out, value. I like the idea of this sort of revisit of neckline up in here, panic right into that month end. Which to me makes sense, right? That would be sort of right around that Jupiter, Saturn, Pluto conjuncture, right on that date there. And then I think, and of course this is just purely conjecture. Who knows what the fuck's going to happen. But I do like the idea of this thing working its way back down into these lows on the next conjuncture as the stock market gets a little bit happier. And we have that little counter trend rally, which should happen somewhere in there, right? Where's July there? It's the end of June. Yeah, it's the end of June. So I'm thinking something along these lines. Stock market finds some sort of footing against these lows. That natural gas stock finds some sort of peak against its neckline. We counter trend rally on the growth names, and the natural gas comes back down, and that sets up the Head and Shoulders. So going to be watching names like this. There's a few of these names, and of course if the technical setup comes in off this shoulder here, and David was saying we really don't want to see this right shoulder lower than the left shoulder. If this does come in here, I'm probably going to go and pick up some of this. So that was one idea that came out of the meeting last night. But keep in mind, this is quite a ways away. This isn't going to happen tomorrow. If you want to try and play that bounce, did they just halt trading? Let's see what we got here. Where is that page? Oh, I thought I had it around here somewhere. Nope. There it is. Boom. Geez, down 1,500. 1660? Did they halt it? Woo, NASDAQ just broke violently. Yeah, everything's coming off here, eh? So it almost looks like there was a nice little bounce through that New York Open. It exhausted itself through the European close, and now they're heading back down on the sell side. Anyway, point of the matter here is it's an idea that I'm going to be watching for probably in a month or so. And at the same time, too, I really do like the idea that if we do get some sort of counter-trend rally out of this, that I think we're actually going to set up a really interesting short trade for us to hunt, when these... Because, I mean, look at this chart. This is ridiculous. It's just Swiss cheese. So as soon as we get through this window, and I don't even know if, obviously, this isn't a low. If circuit breakers are kicking in, probably going to gap lower. But I actually like the idea of a nice counter-trend rally back up into moving average resistance. And at that point, I think I'm really going to get serious about all those, buying Canadian bank stock puts and stock market puts and all that kind of stuff. I really like that idea through there. I also do like the idea, like crypto-wise, that we see some sort of pivot here, end of March, early April, and we're going to get our sort of halvening rally. There will be some sort of relief rally. To me, it seems like a foregone conclusion. The question ultimately is, where the hell's the damn bottom in the short term? I think I've talked to you guys about this recently. What I really want to see to mark these bottoms is some sort of sign of divergence here. So we don't have anything out of MACD on Bitcoin or Ethereum yet. There's just nothing there. We might have gotten little messages, although that sure looks ugly. But we might have got little messages that maybe the bear needs to sort of cool its jets a little bit here on the corn. So that's encouraging. And that might also come in here on Ethereum. It's iffy. I mean, you can almost see it's sort of sitting there going, do I want to break? Do I want to break? And of course we could M out here again. Problem here is look how oversold we are. I mean, is this really a great place to be hunting new shorts? I don't know. That's a tough one. You're coming to the trade very, very late here. No doubt about it. Having said that, into this, end of March, early April, could there be another dump here? Sure. And if anything, I wouldn't mind there be a dump here to create the divergence in these indicators, which will ultimately sort of mark our bottom. So for the time being, just like the stock market, if anything, crypto's hanging in a little bit better than the stock market. As I showed you right off the top, oil, stay the fuck away from oil. Stocks emming out, making new lows. Bitcoin's trying desperately to hang in here. And I think I told you before, this is actually where it gets a little dangerous. If it hasn't been already dangerous enough. But now we have a situation where the bond market's heading down and the stock market's heading down at the same time. So we have interest rates rising and stock prices falling in unison. Very, very dangerous. And, we might get a puke out in the bond market and we have to hear the politicians come out and say, did we say 1 trillion? We meant $10 trillion. This market is not going down anymore, right? Or whatever, something along those lines. And then, of course, everything that we teach at TRI, are V bottoms ever buy signals? No. I mean, maybe if you get a nasty empire, but they're extremely dangerous and difficult to trade. Really, the bottom line here, guys, is until we start seeing W's here, there's just nothing to do. It's just that simple. It's brutal, but it's just that simple. Sometimes, and this is kind of like crypto in 2017, 2018. The first quarter of 2018, we were still feeling uppy. Then we started to break down in earnest, and literally I had to sit there and say, there's just not much I'm buying. I might nanny nibble against the bottom end of ranges, 0.01, 0.02 BTC, but I'm not investing any money in seriousness here. And FYI, everybody, you should all know this. I'm an open book. I did buy about 5-10 G's worth of stock there back January, February. I've blown most of it out. I still have a few positions that I really like. But on balance, I'm not going to be buying anything here now until we get into the end of the month. That's absolutely. I just put myself on hold right now. There was one other name that we had. If you're thinking about trying to play the bounce, Like I said, thinking, maybe like September call options, something along those lines. I really like it when, and we were talking about this in the meeting last night. Obviously, and you look at that Blue Apron, right? I mean, stepping into the vortex. What is that, CCL? I'm not really suggesting that I'm too overly excited about taking this trade. But if I start seeing divergences, I start seeing W's and RSI. I mean, clearly Willie's probably stupid. Yep, very, very stupidly oversold. I see RSI downtrend lines broken. W's coming in on MACD. This name is now starting to look very attractive for a call option. We were looking at just last night at the January $25 calls for $4.30. At the 50% rule, they will be worth substantially higher. I could probably tell you without a shadow of a doubt that this option is probably a hell of a lot less now this morning. But these are the kind of names that I like to concentrate on for TRISOF. Over the past year when we run this program, I've noticed that these trades do really well. That is that you have this big 52-week range, and you notice that these highs, they're not really going to change a hell of a lot as we move forward in time. But you, at the same time, too, you also notice that we have an absolute face rip move down here. Whoa! So interestingly enough, I actually think it's almost like a slam dunk. As soon as this thing puts in some sort of W here, probably going to... what's the best thing to do? I guess we like that. Some sort of dead cat bounce into moving average resistance. Probably, dead cat bounces look something like 38.2s, right into that area. So I'm going to be watching for these kind of trades as sort of a long proxy through this April bottom, late March, early April bottom for a trade into the summer. So I don't know whether I'm really interested in Carnival Cruise Lines in particular, but last night we looked at the TRISOF formulas, and these things are starting to tell us to pay attention here. So I do like the idea. Obviously, it's going to be some sort of bailout package that says that they're going to back their bonds and the company's not likely to go out of business. If you look at the fundamentals on these things, they're trading at absolutely insanely low prices. And I also, what I like about the cruise ship industry is it's store credit only. No refunds. So anybody who's bought a cruise line ticket, too bad, you don't get your money back. They will defer it to a later date. And my hunch is, and the question ultimately is, does this thing actually have any dead cat bounce here? That's what it would be if there is a trade. So I'm going to keep my eyes peeled. Obviously we have no buy signals here whatsoever, but the options are starting to say, hey, you know what, pay attention. So other than that, I got to tell you, like most of these names, there's just not a hell of a lot to do. And really, this is kind of just a don't touch. Super choked about that apron, but oh well. That's the market for you. Gotta live by the sword, die by the sword. As I had sort of pointed out there through the broadcast, and we're already past the top of the hour, so I should probably wind this up. There are some altcoins that seem to be doing pretty well. I'm going to have to remind David that I'm beating him now. That's hilarious. But I'm not really in a huge hurry. If anything, what I'm thinking is I want to wait for bottoms to come in so I can buy like the Tezos and the XTC. So you can see both of them are they're going through the process of trying to find a bottom here. I wouldn't mind going and doing a little bit of nibbling, but first I got to see some sort of buy signals. Stock market, I told you before, things like Silvergate. I like this stock, and I did go and pick up 100 shares of it down here, I think at about $8.90 or so. So I'm back underwater. It might have to head lower, but I like the fact that they've got $10.50 of cash on the books with very little to no debt. So I actually might even be buying some more of this thing here. But this is sort of my thinking out into the next cycle. This is a company that specifically is a bank for the cryptocurrency industry. So I do like that thinking. And then also for like my retirement plans. Interestingly enough, if we do go into recession, usually markets lose about 50% of their value in recessions. And so actually, believe it or not, I think that this thing could actually go a bit lower. So kind of like what I showed you with the S&P 500, 27 is the top. So believe it or not, I'm actually looking for this to lose another $5 here before the carnage is done. But at some point, guys, I mean, this is ridiculous. Basically, the entire market's going on sale. So if I do want to save for my retirement, actually now is when I have to start really thinking about actually stepping in on the long side. Not yet, but soon. Okay, well, there's your video for today, guys. Sure hope you got some value out of this. Super stoked to hear from Jamie. And let's look forward to hearing from him on Monday. Play from a position of strength, guys. Sometimes the market just tells you, look, your best thing to do is just don't do anything. And unfortunately, guys, I hate to say it, but I think that's the kind of environment we're in right now. Okay, everybody, all the best. See you in the lounge. Level 3ers. We will talk seasonality here in about an hour and a half. The only thing left for the old man to say at this point is a big bye for now.